Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend as we are still in the throes of many stay-at-home orders across the U.S. And across the world as we are still dealing with coronavirus. Obviously, nothing changed over the weekend. We did have a little bit of a limit down last night to concern ourselves with, but we are moving up a little bit off of the lows this morning, still down a little over 2.5% in both the S&P as well as the Dow. The Nasdaq down a little bit less, showing a bit more strength. If you're new to the channel, very quickly, do me a favor, click the subscribe button, hit the notification bell. Real quick announcement, on April the 1st, we are going to stop doing the daily market commentary on my personal YouTube page, and we will only deliver it on the Traders Army YouTube page. So if you're not already a subscriber at Traders Army's YouTube page, please make sure that you do. Go to youtube.com/tradersarmy and become a subscriber, because that's where you'll get the daily market commentary. One more thing, it's an announcement, something I'm super excited about. We actually are hosting an online traders summit, how to thrive in today's market environment. So if you didn't see, I put a short video out yesterday just kind of announcing this, but this is going to be myself, Corey Lane, Justin Krebs, Brandon Waddell, Sam Evans, Taylor Frame. Some amazing presenters are going to deliver some information about how do I take advantage of this market environment. This is a free event. There is no cost for anybody to attend, and it's not one of those sales pitch style events. This is really designed to give a bunch of content, bring people together. These are all very good friends of mine, people that I would call a friend, that I think is going to be great for us to all kind of get together and share some thoughts and ideas. So go to tradersarmy.com/traders summit to register today. All right, let's go ahead and dive into the markets. So the ES this morning, we are rallying up off the lows. Now, at our lows, we were in a limit down situation. So we had a little bit of a limit down situation. So this 2174 is really the lowest point that we're going to get to in the Globex session, and we've rallied up off of there fairly hard. Now, looking at some of the areas up above us, not a whole lot has changed in the overnights for me to add, but we are looking at this area up here as a potential reversal point if price does indeed continue to rally. Normally, I would take the gap fill level, but it looks to be that we're basing in front of the gap fill level. So we've gone a little bit higher than that, which was the origin of Friday's sell-off. As we saw that Friday, we had a pretty deep sell-off. We might have a bit of strength, and 2170 is an important number, and we bounced off of 2174. And the reason I'm looking at 2170 as a fairly important number is because this is our monthly area of demand that's not yet been touched. And so this is a first touch of this monthly demand area where I could see a bit of a bounce coming out of that level. Ultimately, I think that if we get a bounce off of here, it will not get us back to new highs. And I think there's a better chance that we make it down to this 1700 level overall, which when it's all said and done, it'll be about a 50% pullback. So I think that's a fairly realistic price target and price estimate, rally up and then price coming back down into here. Now, do I think it's going to stay down there forever? No, I think that we are certainly going to recover out of this. And that's the beautiful thing about indexes, is that indexes, when a stock doesn't recover, they take it out of the index and they put other ones back in its place. So just keep in mind that I think that, while we may get a short-term bounce here soon, I don't know that it's going to be a bounce that's going to break many levels of supply, and that's where we would look for an opportunity to get short on a reversal. All right, NASDAQ, very similar picture to the S&P, rallying up off this bottom. We got a supply level up in here. This one's formed around noon on Friday, where we could see if price returns back into that region, basing here before the gap fill level, which makes the gap fill level a lot less probable. Moving over to crude oil in our markets, we're seeing that crude, we'd hit this level down here, had a little bit of a tweezer bottom, and then came off of it really throughout the evening, came back up to nearly the gap fill level, not quite all the way up, and now basing sideways in front of that region. Looking at this, there's a small 15-minute level right in here, and this 15-minute level that we see is off of this very strong move away. I actually like the level up above it a bit better on the 1 hour chart. That's a very clean wick over wick area below a pivot high. That's the level that I'm looking at the moment. Moving over to crude, in our crude oil markets, we're really chopping sideways inside of crude. You know, when I look at this on a 4 hour time period, we're putting in a bit of a triangle here. It's not a fully formed triangle for certain, but definitely putting in a bit of a triangle pattern. And so that triangle pattern that we're seeing here always has the opportunity to break out, but we would need 5 touches, right? 1, 2, 3, 4. I've not gotten the 5th touch as of yet. We would anticipate that if it's a true triangle pattern, our 5th touch would be down here, and we would expect to break out to the downside on a triangle reversal pattern. Now, it may not, right? We may just meander up out of this level, and it's not going to be a triangle breakout. But that's what I look at when I look at a triangle is do I get my 5 touches? And typically it'll break out on the 5th touch. So it would be to the downside at this point if we do get that breakdown. Well, that's part of the reason why we look at this little area here, that if we get basing in front of 1458, we could see a breakdown from that level. Looking at our bonds and currency markets, a lot of currencies are setting up for a similar breakdown. And I think what we're seeing right now in this sideways kind of stall is that there's the potential for the U.S. stimulus vote, the U.S. package later in the day today, and we'll see what that looks like. I think that's a good reason why we're seeing markets chopping sideways. And it's really all of our bonds and currency markets. So I'm not going to spend too long on these markets because they all look very similar. We've got a demand level down below here in the bond markets, where if price comes back down into, we could see a little bit of a reversal. I don't love the basing that we're getting here. We may also get an opportunity, though, for a breakout to the upside, provided we get some basing above this region. In the Aussie, we have a potential breakdown level at this 56.67 area, once again, provided that I get the necessary basing. Last night when looking at this, we were sitting right in this area here, and we have not come back into really give us any basing as of yet. Same picture in the euro. We're looking at this area in here for a potential euro breakdown. I think this level is still pretty good on that euro breakdown. We're seeing lower highs right in here. So, could we get a rally up to a supply level? Yeah, I think that's also a distinct possibility. A rally up into this region here, I think is a potential. So if you're looking at more of the reversal style of trade, if that's really kind of your wheelhouse, you can use this area up in here for a potential reversal. Moving over to the Canadian dollar, we can see that our Canadian dollar, we've got some sideways price action above this potential breakdown area right here. I'd like to see, now we only have one. This is our second touch. I'd need price to come up here and give me one more base off of this level for this to become a viable breakdown. It's not there as of yet. Great British Pound, Japanese yen. Once again, you're going to see a very similar pattern in the pound and the yen as we are sitting above a potential breakout area, and once again need that basing in order for it to make sense. I still think it's very viable for price to come down through here. When looking at a potential reversal, you do have this area up here as a potential reversal level, and it's a very, very small zone at this point. And then in the Japanese yen, we're actually looking at the Japanese yen's put in what's traditionally the start of a double bottom pattern. With lower lows here, but our momentum was going the other way. Now, unfortunately, we weren't able to get the basing here to give us the breakout, and that's where we're seeing the rollover kind of occur as of now. So if you want to look to this one, I think we could actually get, since that double bottom looks like it's failing, provided I get some basing, you may get a breakdown right below here. So once again, a lot of these currencies look like they're waiting on something to happen. That's kind of what the markets are really kind of telling me at the moment. So just be very, very, very cautious in your trades. Don't over leverage. I think this is the time when it's really good to make sure that you embrace the micros, so that you can position size accordingly. So if you have any questions, as always, please feel free to send us an email, support@tradersarmy.com. I will talk to you soon. See ya.